Hello traders, this is Alla at 1:52 EST on July 26. Here we go, 8 minutes until FOMC. The most important financial news in the markets that impacts S&P, E-mini, major indexes highly. Being aware of FOMC is absolutely crucial if you trade S&P and major indexes. FOMC raised rates at the July meeting, the second of 3 expected hikes this year. So, when the policy statement will be released at 2 p.m. EST, we expect S&P to respond. As we know, Fibonacci is the only predictive natural tool in the markets. Fibonacci tells you everything you need to know about the markets well before any major news release. So let's review S&P and let's take a look what to expect. Here's a chart that's been present in the trading room for the last 7 years. This is S&P on monthly chart as it was at crucial Fibonacci support. When you see this hot pink line, this shows you this is the most important Fibonacci support you can never ever take for granted. You must adore and respect highly. This is where bullish rally taken off from in 2011 and reached Fibonacci reversal zone, as you remember, in 2014, 2015. When price collapsed until this Fibonacci support, buyers stepped in again. Please pay attention. From famous 1800 number. In 2014, 2015, 2016. Bullish rally from 1800 number, currently way overextended, and shows you very clearly on my favorite chart of all times, weekly, that bullish rally reached reversal zone. This is bullish exhaustion levels. This is a chart that was also present in the trading room for years. Reminding you, when price comes to reversal zone, monitor for long. This is institutional support that also reminds you 1800 number on monthly chart is also 1800 number bullish reversal zone on weekly chart. Rules are met, take a trade. The reason why we're seeing lowest volatility on record and some of the most challenging day trading conditions ever is because weekly chart reached reversal zone. The problem remains. Institutions are not shorting these markets, and that's a problem. Next, as a day trader, you're paying attention to shorter time frames. If you're using larger time frames, such as monthly and weekly, you're trading with institutions. You understand extremely well that institutional bias remains firmly bullish. However, bullish rally reached exhaustion levels. And this is what's also confirmed on daily. Daily chart from this crucial Fibonacci support, decision point 2 at 2400, where rally started in the month of July, reached reversal zone. Knowledgeable day trader never ever buys in this area ever. This is your hourly chart. This is the chart you use for your day trading entries. If you choose to trade charts 1 minute and higher, hourly chart is crucial. Hourly levels you can identify days in advance. As we discussed since this Monday, this is Fibonacci reversal zone. When price comes to this level, you can never enter into. And this is where selling pressure stepped in yesterday and earlier this morning. If S&P is selling off, it is a spectacular news for day trader. Buying into Fibonacci reversal zone, not an option. What would I like to see ideally at the time of FOMC news release? I would like to see price collapse to here. Since institutional bias remains firmly bullish, and you understand extremely well that institutions continue buying this market, that would be a lovely place to be. And only if rules are met, you can take a trade. Right now, selling pressure in a progress as expected, as we discussed for days. So, price can stage very powerful bullish pullback from this support. Most powerful place to be, since institutional bias is bullish, still here. This and this area. So, shorting near this place, not a good idea. As you can see very clearly, this is where buyers stepped in yesterday morning. Once, twice, 3, 4, 5, 6, 7 times. So, no matter what the news is, bias here is bearish. Do not short near this support. Bias here is bullish. I would love for the price to collapse instantly and to be here 5 minutes after FOMC release. As a knowledgeable trader, you know extremely well. You cannot pull a trigger at the time of news release. You know extremely well that you need to allow market to settle down for at least few minutes. So, I am converting the chart to 1 minute chart, so you can witness instantly the accuracy of the method, as exact same levels remain in a play. FOMC release at any moment. FOMC holds target rate change at 1 to 1.25 as expected. News as expected. Remember what we discussed earlier, that I would love for the price to collapse, but this is Fibonacci support you cannot short near? Shock or not? How did I know that this is not the place to short near? However, as a knowledgeable trader, you understand extremely well this means nothing. Pulling a trigger immediately after FOMC news release, not an option. You allow price to settle down for at least 3 to 5 minutes. Fibonacci support identified since last week in a play. So how did I know that this will be a problem area? Remember that? I warned you. You cannot touch the market. Allow price to settle down, shock or not. This is your Fibonacci support. This is your Fibonacci resistance. Identified by Fibonacci days in advance in a play on 1 minute chart. As we discussed with students, allow price to settle down. Do not pull a trigger. If you do, your broker adores you. Your account doesn't. Crush and burn, baby, and remind everyone that bullish news does not mean a thing. Lower you go, better off we will be. So, ladies and gentlemen, everyone is clear about the power of Fibonacci. This is your support, this is your resistance. Market remains indecision. Not the place to buy into, not the place to sell into. This is a chart that's been present in front of you since Monday morning. And that's how you stay out of trouble. Only if you play by the rules. Never ever disrespect Fibonacci levels. Price respecting Fibonacci resistance. 5 minutes after FOMC release. Look at that. To the tick. As expected. Institutions can afford to buy this high. You as a day trader cannot. Please take a look what's been happening in this area since yesterday morning. If you are buying this high as a day trader, you are in serious trouble. This is where you buy as low as possible, not this high. This is your historical high. This is your reversal zone. If you buy this high, your success rate less than 15%. If price is not retracing lower, institutions can buy this high. You cannot. Institutions can afford to be negative for days, weeks, and months. You cannot. You as a day trader, every single tick matters. Price in pain. This is a barometer chart that's always in front of me. This is how you stay out of trouble. If you understand price action, if you understand Fibonacci, this is fluff. Fibonacci resistance respected. How did I know that this is not the place to buy? How did I know that this is not the place to short? Test is on. Only if you know the rules, only if you play by the rules, success is possible. Market stock. And price once again reminding you, if you know Fibonacci levels, if you know Fibonacci rules, you never pull a trigger randomly. You know extremely well where to enter, where to exit this trade. And this is what happened 15 minutes since FOMC release. Look at that. Only if rules are met, you can take a trade. Currently price, incomplete correction, frozen at this resistance. Again, institutional bias remains long. But if you are buying this high, this is what you get. Non-stop bearish pullbacks. Only if you know the rules. Only if you obey by the rules. Success is possible. Have a marvelous afternoon, everybody. S&P respecting Fibonacci support, Fibonacci resistance, and doing nothing. We've been here more than 30 minutes. I wish you a spectacular afternoon. Trading room will reopen tomorrow morning.